Hello everyone and welcome to my company presentation. Today's main question is why invest in GE Aerospace? To answer this question, we will look at three reasons. First, I will talk about two profitability ratios and two liquidity ratios. Then we will go over the recent final news and finally we will take a look at the share price. Before we move on to the first part, let me briefly explain that GE Aerospace has been a standalone company since April 2024 and is no longer part of General Electric. This separation is important to understand as GE Aerospace's financial results and strategic decisions are now completely independent of the GE Group. This affects how we should interpret corporate ratios and is critical when considering whether investing in GE Aerospace is a wise choice at this time. Now let's take a look at financial ratios. Liquidity ratios are a measure used to assess a company's ability to meet its current liabilities with its current assets. This is crucial for investors who want to know if the company has sufficient liquidity to repay its short-term debts. The blue graph represents the current ratio. A current ratio of 1 or more is considered healthy. In 2024, GE Aerospace achieved a current ratio of 1.09. This is a good result. The orange graph is the quick ratio. A quick ratio of 1 or higher is desirable. In 2023, the quick ratio was good, but in 2024 we see a slight decline. This is because in that year, GE Aerospace completed its separation from the GE Group, which entailed significant restructuring costs. So this temporary drop in the quick ratio is explainable and does not make it a cause for concern. Now let's take a look at the profitability ratios. They provide insight into how well a company uses its assets and equity to generate profits. A good ROA is usually above 5%. The target for a healthy ROE is above 20%. The figures of GE Aerospace are above these target values, and this means that they use their assets and equity efficiently to generate profit. In addition to good figures, GE Aerospace also features positively in the media. The company recently entered into a long-term partnership with MTU Maintenance for engine maintenance. This partnership helps GE Aerospace expand its maintenance services globally, increasing opportunities for future growth. The separation of GE Aerospace and these new partnerships show that the company is moving forward and strengthening its market share in the aerospace industry. This makes the company a very interesting and growing player in the industry. Finally, we take a quick look at the stock price. GE Aerospace shares have shown a clear upward trend from 2015 to 2025. However, recently the stock showed a temporary decline, but in the last month we see a renewing rise in the share price. This is probably due to an important strategic development, namely the long-term contract recently concluded with MTU Maintenance. Given GE Aerospace's strong financial performance and the strategic growth it is experiencing, GE Aerospace is an excellent investment. The separation from the GE Group has allowed the company to fully focus on its growth opportunities while maintaining its financial health. For investors, the company offers attractive growth potential and a solid foundation to create long-term value. In short, GE Aerospace is an attractive choice for investors looking for a financial sound and growing company with strong future perspectives. Thank you for listening.